Good afternoon. Welcome back. This is Shauna LaRue Marai, and this is the Pennsylvania Department of Community and Economic Development. This is office hours for the definition, and we're also going to talk through yesterday's case studies, answer some questions that you guys have. We have a few more people joining. We actually are expecting, I think, 70 more people. So I thought I would go ahead and start with the Mentimeter. So if you can pull out your smartphone, or you can use a separate browser, we thought we would go ahead and start. I wasn't planning to use Mentimeter for the office hours, but I figured we might as well just, again, embrace all things Pennsylvania. So if you get your smartphone out and you go to menti.com, then go ahead and tell me who you are a sports fan nut for. So are you a Penn State fan? Are you a Pitt fan? Or maybe University of Pennsylvania? So we thought this might be a fun way to get started for today. And go ahead and vote now. We'll wait for the results to come in. Ooh, looks like we have lots of Nittany Lions. I think I mentioned before, I have a really good friend who lives in Enola, right outside of Harrisburg, and she is from Pittsburgh, though, and so she's a big Pitt fan. I've actually been to a Pitt football game before, so, oh, I'm surprised, University of Penn, not enough Quakers, but a few out-of-state fans. So we'll just let the results kind of come in, see who else we have here. I'm sure that I could have mentioned others within the state, and I'm sorry for those of you that went to Indiana University of Pennsylvania. I actually don't know your mascot. I don't know how many people have, I don't even know how big IUP is. Maybe you could chat us and let us know. It'd be really fun to figure out. But I know there's lots of great schools within your state. I went to a state school in Indiana. I live in Columbus, Ohio, and my husband went to Ohio State, so I tend to think more of the state schools than private, but you have a lot of really great private schools too that I'm sure I'm missing out here. Okay, so I think we have a good quorum here, so I'll go ahead and move on. Seems like there's a lot of Penn State fans, which would make sense. So some of you already answered this question yesterday, but I would like to see if, now that you've seen the income calculator, would you use it? So if you can go ahead and answer this question. And those of you that are itching to get started in the questions box, you would like to go ahead and open it up and start typing in your income eligibility questions, the ones we haven't answered. You know, certainly feel free to do that while we're doing Mentimeter right now. But I just wanted to make sure that I kind of give DCED a fuller picture of how you may operate your program in the future, that you may think about using the calculator. And so some of you, you know, maybe chose, you know, Lord, I have no idea, potentially. We will be doing the calculator next week for those of you doing adjusted income for tenant-based rental assistance. So some of you may be waiting for the fuller demonstration, but for right now, I'm interested in that gross annual income. Do you think that you'll use the calculator for gross annual income? It'd be really just helpful for us to know if now that you've seen it, would you actually use it? So please provide that. And again, those of you just joining, we're just doing a couple of Mentimeter questions so far, and then we will going to go ahead and get started with answering your questions in the questions box. So you could certainly type in your questions about yesterday's definitions, or maybe it's a source of income that we haven't talked about yet, or even if we have talked about it, we're happy to talk about it again. We know some of you kind of see some similar issues across all of your clients, and I'm sure your question would be helpful for others to see what your question is, and then learn from each other, which is, you know, one of the goals of our webinar series. So it looks like the majority of you saying, yes, of course, that you've seen it, that you're going to use it, so thank you. And then this is one thing that I thought would be helpful as we go into today's Q&A. Again, it's about the definitions. You know, given the presentation yesterday where I spent time on the Part 5 and IRS definition, I would like to know if any of you will be changing your definition, and feel free to let us know what you're thinking about. So I did a pick the winner on this one, so we'll have to wait or let the results come in before I hit the button here. Some of you have been maybe long fans of the Part 5 definition, and you are going to continue to use the Part 5 definition. Maybe if you feel the same way about IRS, or maybe you've worked in IRS for a long time and you're ready to get out of it and you would like to use the Part 5 definition since you heard that so many people are using the Part 5 definition. So let us know your thoughts. And then, of course, you know, I always like to have a little escape hatch here, and the escape hatch answer here is, Lord, I have no idea, and that's totally fine. And maybe it's not your decision to make. Maybe you need to talk to your senior manager, or, you know, maybe you need to have further discussions as a team. And again, I know you've only seen, you've only maybe are new to the program and have only been working for a short period of time. So maybe you're still trying to figure out Part 5 versus IRS. So, okay, so we'll go ahead and I'm going to hit enter so that we show the winner. And I know we're on all pins and needles. Okay, no wins. Okay, so those of you that answered, you feel comfortable with your definition and that you're not going to be changing, and that's really good to know. Okay, so I'm going to stop sharing Mentimeter right now, and I'm going to go ahead and skip over to the questions box, or hopefully hear from Kimberly. Do we have any questions in the questions box that we can get started with this afternoon?
We have one question. I assume we are to use Part 5 for CDBG and not 1040.
So for CDBG, you have the same choice as you do for home. You can use Part 5 or the 1040 definition. So either one is acceptable. I guess I'd like to know more from the person who asked that question, Kimberly, what they might be thinking about.
Okay.
Yeah, like what maybe led them to that. I think I mentioned yesterday that in CDBG, it's less, a little bit less prescriptive than home, and that tax return actually can be very helpful to you. And just using a tax return would be acceptable for CDBG so long as it's current. So.
That is the only, wait, let me see. Oh, she did respond. Only asked to make sure that I'm in compliance with what DCED wants.
Okay.
A question, if the home income limits change when performing an income determination, which limits should be used?
So thanks for that. So the person who asked that question might be thinking about currently the 2019 income limits are in effect. July 1st, which is next week, the 2020 income limits will go into effect. So if you are still qualify in the household, then it depends on how quickly you can move in terms of the calculation and the documentation. So you should decide how quickly you're able to move ahead of that July 1st date. If you can't move that quickly, then it's probably going to be the 2020 income limits forward. It's a date. It's an as of date. In the case. Okay. So I'm.
Oh, hold on. Shauna, you were cutting out a little bit. Okay, another question. What is the procedure if a spouse's name is on the deed currently, but he moved out recently pending separation or a divorce? do we count his income, or should the wife be counted as a one-person household? And what needs to be included in that documentation?
Okay. Can you hear me now? Am I coming across clearly?
Right now you are, yes.
Okay, great. There was some background noise, I think, on one of the other lines, but it's been pretty quiet over here, so sorry about that. So if you can prove, if she's the only one on the application, I would say go back to the application. If she's the only one on the application and you can document that he lives in a different location, so you might have a lease, it might be a utility bill for another location, then you wouldn't necessarily need to count, you would not need to count him, sorry, let me just be clear, you would not need to count him in terms of his being a household member or his income. The deed to the property is different. So I assume you're doing this on the owner-occupied rehabilitation. So income qualify her, you can demonstrate he lives somewhere separately, and maybe they've started their, proceedings to become separated. You still would need his sign off though.
Okay, perfect. Thank you. Someone is asking for clarification.
Oh, can you not hear me? Oh, sorry. Sorry.
You must have been cutting out.
Chantel, are you able to hear me, or Donna? Am I coming across clearly?
Just then you were going in and out. But keep speaking and then I'll let you know.
Okay, I'm happy to, this is the place I've been using. I'm happy to move if I need to. So I just want to clarify though on the last question, when we get to the deed, how am I coming across now, Chantel?
Just fine.
Okay, so the deed, so I assume you're doing owner-occupied rehabilitation. So outside of income eligibility, so in terms of doing the work, in terms of the house, you would still have to have the husband sign off on the deed to the property, and the deed to the property would be in his name. So you can't really do work unless you have his sign off. So it's really, I'm talking about income eligibility, but in order to move the work forward, you are going to need to get his release, if that makes sense.
It certainly does. Thank you.
Oh, sure. Just let me know if I still have audio issues, let me know. Okay.
Okay, thank you. And then we have one person who's looking for some clarification on the use of self-certification for income verification. Is that during COVID only?
Okay. So I actually don't like the home waiver that that kind of came across in terms of the wording. So let me just try to be clear, and I really appreciate this question. So what happened with COVID is the folks at HUD issued a waiver that was available, and DCED took advantage of it, that said you could do a self-certification for new rental and new tenant-based rental assistance clients during the period of April to December of 2020. And DCED said, this is a waiver that we want, and our period is from April 30th through December 31st, 2020. New rental, new TBRA. And HUD is about to release a form for this certification. And the form will be available shortly. I've been keeping DCED updated about it. However, it looks like a virtual application. It does not look like other self-certifications that have been part of our programs and our business for a very long time. So this is more of a virtual application that asks about how COVID has affected them. It asks questions about all their income and asset sources, and the client has to provide, the numbers associated with income and asset sources. They just have to do everything short of documentation. And so the form looks like a virtual application. It actually does the imputed asset calculation for Part 5. It includes a lot more than what somebody would know, again, underneath our programs for self-certifications. So while it's called a self-cert, it looks like a virtual application to me. We allow self-certs in the home program in particular. You can do a self-certification, and that's acceptable during the period of affordability, during years in which you don't have to collect source documentation. And that self-certification form often looks like like the household says, this is my income for the household. This is the number of people in my household, and I hereby swear that my income is below this level. And they usually check a box that says household of 4 below, $60,000 or whatever the income limit is for a household of 4, and then they sign the bottom. It's usually one page. CDBG has a similar sort of self-certification for some activities that looks a little bit different, not about household often, but typically about their family income and signing off about their family income or their individual income, depending upon the CDBG activity. So, so hopefully that helps answer that question. There is a lot to know about, like HUD's terminology related to self-certification, how I feel like there's 2 different types here.
Okay. We have a question regarding housing rehab applicant notified one of our grant practitioners today that their 28-year-old grandson has indicated he wants to sell his own home and go back to college. So he asked his grandfather, who is the rehab applicant, if he could move in with him. So would the grandson's house be considered an asset or income if it's sold? Because remember, the grandson is going to be moving in with the grandfather, and the grandfather is applying.
Yeah, and it's homeowner rehabilitation on the grandfather's home.
Yes.
So yeah, so they would, I assume it's the grandson moves in, now they're a household of 2.
Correct.
And so you would look at the son's ownership of other property. So his other house would be counted as an asset, and then any income that's earned from renting that out if he rents it out. So both would be involved in the calculation. I would want to know about the 28-year-old grandson. I want to find out whether or not, it says he is going to go back to college, if I'm reading that correctly, but I want to know about his income sources today, because remember, it's a snapshot of his household income today, not the future. So I'd want to know more about what the grandson earns, and then obviously add it into the grandfather's.
Okay. Have an applicant for CDBG housing rehab on sidewalks. He owns his own home and lives on the 1st floor, but rents out his 2nd floor apartment. Do we need to income verify the renter as well, or would this be a 2-person household? So it's 2 separate living units. The owner lives on the 1st floor, and he rents out the 2nd floor.
So because this is more of a DCED question, Kimberly, but we can kind of go through it together, because this is what you're requiring for this particular sidewalk program.
Mm-hmm.
It seems to me that because they're going to benefit from the sidewalk, that this would be, a 2-family home potentially, as opposed to, it says 1st floor and 2nd floor. I assume it's still a single-family home. And I assume that it is, even though he's collecting rent, you would include the rent that's being received as an income source. It's like whether or not you have to establish them as either a household, or are they 2 separate households, but then if they're 2 separate households, the income source from renting out the 2nd floor would be counted as income. So I could see this one of 2 ways.
Okay.
So I think it's whether or not they're actually considered to be a full household or not.
Okay. Donna, I didn't know if you wanted to respond at this point.
Hi, everyone. I agree with Shauna. I'd like to deal with this in addition offline, because there are some questions we don't know about the household. Is he just a renter, or is that 2nd floor a separate unit? The things that Shauna has confirmed is that if it's a rental in any way, we have to include that rental payment as part of this particular owner's household. So what I'd like to do is just get a little bit more information. We know who asked the question. We'll get back with them. But it is the potential that if they're eligible, yes, we would do it. But we just need to define what it is we need to collect because we don't have enough information.
Okay, I think that's fair.
Thanks.
Yeah,
Thank you, Donna and Shauna. The next question was, a few grantees use a HUD user income limits documentation system for income limits. It lists multiple HUD programs, including home. Is there any issue with using this document for home limits?
Okay, so I feel like I read this too. I feel like there's a couple things going on. So I would like to make sure that I clarify what I tried to say yesterday about the income limits by themselves first, and then we'll take the second part of the question. So one thing that we continue to run into, because the income limits changed in 2014 forward, where the home income limits, CDBG income limits, et cetera, they changed in the 2014 Appropriations Act, and the 30% of AMI changed, extremely low income. So we actually have a different set of income limits that we wait for every year that are also, they're provided by HUD user within HUD, but it's separate from community planning and development where home and CDBG, et cetera, lives. So you can't use the income limits in HUD user. They have a different effective date. They're all the way back to April. But we have a new effective date for our programs, home and CDBG. Again, they came out last week. So it's July 1st, 2020 is the effective date. And they do that because home income limits and home rent limits are effective on the same day. And CDBG decided a while ago, the Office of Black Grant Assistance, why would we have a different income limit effectiveness date? Like, that's really hard for grantees to track. So you can't use the same income limits. If you work in other HUD programs, like if you work in public housing or you work with the HUD multifamily programs potentially, you guys have a separate occupancy handbook that details income eligibility, kind of ad nauseum, okay? The occupancy handbook, it's 4350.3. It's on revision, I think, 3. I think the last time it was updated was November of 2013. That's really the best place to go for income eligibility guidance. I'm not going to say that some things that I've provided in this training or what's in the training manual aren't similar, but the folks in home and CDBG have not signed off completely on 4350.3 because they just have different ways in which the programs are administered, and also for folks that work in home buyer or owner-occupied rehabilitation, that occupancy handbook goes into far greater detail about rental situations that just don't apply. So it's similar, but in some cases it might feel like a little bit of apples and oranges. So I think depending upon the HUD program you're working on, I would just tread carefully. Okay. And if you want to get specific about like a policy that you would like to verify with me, you can try me. I may know what it is in the other programs, but I would not uniformly adopt it.
Okay, thank you. I believe we're all caught up with, oh, no, one just came in. Where do you recommend we put unemployment, under benefit, pension, or other income? And how do you recommend we handle projecting it, especially right now with people not knowing, oh, it scrolled, sorry.
Yeah.
Especially with people not knowing when or if they're going to get back to work this year.
If they're talking about either the form or the calculator, it would be counted as benefits. Other income is typically other sources of income not covered, but I would call it benefits or public assistance would be unemployment. Part 2 to that question, and again, I can appreciate it. You guys sit in a unique position. you have to exclude that initial $600 of emergency unemployment, and then you have to project, something forward. So I always tell folks to get to know how many weeks of unemployment are available in Pennsylvania, okay? And that could change. So you're going to use the best information you have to make that prediction. So after you exclude the 600, what's remaining, and then how many weeks are they typically eligible for? And I would use that to project forward. Now that is specific to those right now who are unemployed. Remember in the presentation I said that some people collect unemployment like every single year because they work a certain job where they're employed for part of the year and collect unemployment the other part of the year. That is not, that would not be apropos to the example that I just gave about projecting forward for the number of weeks they might be eligible for unemployment in the state of Pennsylvania, okay? That's pattern employment when you've got construction for part of the year and then unemployment for part of the year. Okay.
Okay, thank you. We are caught up at this point. Oh, the moment I say that, one comes in. So I should keep saying that, right? Do we need to show proof if a spouse is recently deceased to show that the applicant is now a one-person household and not two? Would the death certificate be appropriate?
So I really appreciate this question too, because again, I feel like what was in my slide was talking about if somebody is deceased, that it would be good to get a death certificate, because that is what HUD wanted me to put on that slide in particular, because these are based upon a national presentation. I know it's difficult to get the death certificate. I just know. So I would say, particularly right now when documentation is not as necessary, and you can use COVID as an example, I wouldn't make that a hard and fast rule. I would just see what you're able to glean from the household. I would accept even a self-certification, that the person is deceased. I do not think that you need to make it a hard and fast rule. Now, some people are really good about the documentation. They've had to, close bank accounts. They might have had to, so it may be readily available to certain households, but you can at least request it. And if it feels like they don't have a copy readily available, you can self-certify that that they have a deceased household member and not to include them. I just feel like it's overly burdensome sometimes on our households to ask for some information. You guys may feel differently, but whatever your policy is, just make sure that you're treating everyone fairly and doing the same thing with everyone.
We are caught up at this time.
Okay, sounds good. And it just reminded me too, like I've also done obituary lookups, so it also may be something like that that you can use. Again, if you don't want to bother the family, there's a lot of things available, if you Google it. Okay, well, so we'll let some more questions come in. I guess I would like to know, we're halfway through the hour and we could still have some questions coming in. Do folks want to talk about any of the case studies that I reviewed yesterday? Maybe you could try to raise your hand and let us know if you'd like to go through those scenarios. The little hand button, I think, is right above the chat button. It has a little globe. If you would like me to go through those, we could go through those in detail, either the Part 5 or the IRS definition. Or I could also just show annual income in the calculator again. Either of those options are fine, but let us know what would be helpful for us to do while we wait for more questions. Are we seeing any hands raised?
I do not, and I do not see any other questions coming in.
Okay. Well, Kimberly and Donna, what would you like me to do? Would you like to wait for more questions to come in? What would be helpful?
I think if you would like to, oh, no, wait, 1 second.
And there are 4 hands raised.
Okay.
Oh, there is?
I know, I couldn't tell either, Kimberly.
Where am I don't see that. I did have.
Oh, okay, now I'm seeing some more. Okay, so they'd like to go through those. Okay.
And there is another question. For economic development, when qualifying a micro enterprise business owner's income, what time frame of income should we review? Due to COVID-19, many businesses have had 0 income the past few months. That came in on a chat question.
Yeah, I'm just looking at it right now. Okay, so actually I was thinking that somebody would ask some questions because we've been talking about net income from a business, and I even said like, oh, you can past 2 years. Well, fundamentally, maybe their business has changed because of COVID. So I would recommend, and we put something in the TA manual that is a net income from a business like form that's available on the HUD Exchange. I would ask the micro enterprise business owner, I'd have them fill out that form or have their CPA fill out that form. That probably would be your best bet because it would be a snapshot of today's net income from a business. So that's probably what I would recommend. And you're right, they might have 0 income. And if that's where they are, then that's what you would use. And this is a good time for me to say, there's no such thing as on the tax return, there could be a negative in terms of net income for a business, but net income is, negative income is really 0 in terms of income eligibility. You don't take it off of other income in the household. So hopefully that helps. So the form that's available to you there is net income for a business, available nationally. You should be able to click on that link and that should help you. But many businesses are struggling and some right now have 0 income. So I think that would be acceptable. Donna or Kimberly, would you folks agree with that?
Shauna, this is Donna. Yes, I would. And we are trying to get a little bit more information together to put out there for those who are going to come in to assist businesses and especially these micro enterprises.
Okay, great.
I don't think that's the last of our questions as we move forward.
Absolutely. Absolutely. Okay. All right. So I'm going to close out my chat here, and I'm just going to go ahead and launch the calculator, and I can start going through the scenario again. But,
okay. While you're launching that, one question as far as clarification,
sure.
Person is stating you did mention the 4350.3. Would you suggest using that book as guidance because Part 5 is directly from that?
I only mentioned 4350.3 for the one person who wrote in that they work in other HUD programs. And if the other HUD programs are rental, then it is fine to use 4350.3. Everyone else, just close your ears. It's 700-800 pages. It is a voluminous HUD handbook and not as helpful to CPD programs. I would just use the TA manual. I would use the guidance in the PowerPoint, and you should be good to go. And I did commit to, there's 1 or 2 edits that we'll make with DCED to make sure that you have a couple things that we talked about around the definition of live-in aid and things like that. We can reissue that given the training and make sure that you have good information there.
Okay, wonderful. Question regarding, given COVID-19, is it okay to have one representative adult come to the meeting, the income verification meeting, and then send the app home with them to get the other remaining adult signatures?
Yes, that is totally acceptable. And you could also, I don't know if any of you are using DocuSign or some other like electronic format. I mean, that would also be acceptable as well.
Okay. The questions are caught up, and Chantel had indicated there were hands raised, but Shauna, I do not see on my screen how to find those.
I saw them, and I think folks definitely wanted to go ahead and look at the case studies again, or at least have me like walk through the calculator. And I don't know how many people, maybe some folks weren't able to attend the full session yesterday, Kimberly. So I'm thinking this was set aside for definitions and the case study, so we should go ahead and probably do it. So, okay, so I'm trying to, I do have this open. So our first case study and that we talked through yesterday was for the Part 5 definition. It's actually a 5-person household, so I need to back up. The first case study was Greg and Mary, and they have triplets. They have Timmy, Tommy, and Tony, I think. So, I'm gonna have to start over. Sorry. Let me go ahead and start a new thing here. I was trying to do more than one thing at one time, which is never good. Okay, we all know this lesson. We learned it when we were children, and here I am doing it again. So homeowner rehabilitation, this is a family of 5. I don't want to have three persons in my household. So I'll say this is revision 2. All right, so 5 people in the household. So we'll just show Part 5 here. I put in a beneficiary ID quickly, and then I put in the number of household members. And the reason for why it's like blank and you can like develop your own alphanumeric is because when we launched the calculator, we want to make sure everything was anonymous, particularly for the AIDS housing program. So, just want to make sure that you knew that this is really up to you. You can decide when you use the calculator your own beneficiary ID in the beginning can be alphanumeric, same with beneficiary member ID. I like to use letters. You could also use letters that indicate like the person's like first name, like their first initial. That would totally be fine. So we're in Pennsylvania, right? And so in Pennsylvania, we are in the Allentown, Bethlehem, Easton, and we're below 80% of AMI. So this is the income limit screen. You can print this, okay, which sometimes people find very helpful. Going back to the person that wrote in that said, hey, what if I have a different income limit today and I'm doing income eligibility income limit different in the future? Sometimes people like to print out this page to demonstrate that I was doing income eligibility for 2019, particularly because the income limits are going to change next week. I'm in home, and so just like CDBG has this link too, you can go to the home income limits. So, so this is where we are, and we know we have a 5-bedroom household in this jurisdiction, and we have to be under $67,750. So I'm just going to hit continue. We've not done income eligibility for this household before. And then we have 2 options, Part 5 or IRS. Part 5 is this particular household. So I mentioned yesterday that there are 2 different options for the Part 5 definition. I'm going to go ahead and put in the passbook rate, the 0.06%. This is the national passbook rate. But you can choose the short form or the guided form. The guided form just gives you a lot more, asks you a lot more questions about income eligibility. Some people like it because of the way it's set up. So I'm just going to go ahead, at least for now, and just do, this is Greg, who has some checking accounts, a joint checking. $1,000 is the cash value. I thought I could reuse one of those. And then there's no income from the asset, so I'm just going to hit save. And then if we had more assets, we would just add another, but I'm just going to hit continue because for him, we don't. So we have a job for him. And if you choose the guided, that's what opens up is this, a lot of information here where you can put in the description of what he does. And then you can look at his hourly wage rate, or if you want to go ahead and use the annual amount. In our write-up, in our case study, and we didn't pass out the case studies, we just had them available to us in the WebEx. So $725 is how much Mary makes. Sorry, I need to do Greg first. Greg makes $15 at the Amazon warehouse in Gouldsville. Okay. And then he works 40 hours a week times 52. And then we don't have any like overtime information, but we know he works at Amazon, so it'd be really good to just make sure he doesn't make any overtime bonuses, anything like that that should be included. We don't have any information about raises or COLAs, but if we did, we could put in when he's going to get his new raise, like the time frame and the new hourly wage amount, the COLA. So what we could do is if we did a third-party form, which is not required in home, but you could do it and get information about overtime, bonuses, raises, COLA, et cetera. But for now, for Greg, I'm just going to hit continue. And then, of course, I have an error because I did not provide the description. So his job in Amazon is that he just works in the warehouse. So just put warehouse, or maybe. Okay, then I'll hit continue at the bottom. Ooh. 2 errors. So he doesn't have another job, so I'm going to select no. And then does the member receive any other benefits or pensions? I'm just going to put no. And then no public assistance. So the guided, some people don't like it because you have to kind of comb through these questions, but you definitely get that really helpful form that walks through the hourly rate times the number of hours worked per week, et cetera. So I'm just going to go ahead and put in for the next person in the household. Oh, actually, let me just make sure. Another beneficiary member. I didn't hit that. So yes. So Mary. And then she has a checking account, or sorry, a savings account statement, right? Savings, I think it's like $3,000 in our write-up. No, $5,000. And then $10 in interest, if I'm reading the facts correctly. No, 10 cents. Sorry. You know, our savings and checking account statements, like hardly anything is earning any income anymore. Okay. So I'm going to hit continue. So we're not going to add any more jobs for that member. We're not going to add anything else for this household. But if we were to choose like the short form, which I can do on the second scenario, what's different about that is that it comes through as like each of these A, B, you can actually click on each of those and it opens up where you can add assets, add income. You just don't get all the bonuses, the COLAs, raises, et cetera, not in the short form, okay? So it's a little bit different. If you look at the guided, which is much more purposeful in terms of collecting all the income and assets information, than the short form, which is just if you're used to this and have everything at your fingertips and have a calculator, you can add, like kind of do subtotals for people. So this is the income calculation worksheet, or as we call it, the annual income survey. You can export to PDF. I'll show you what that looks like. But this is for this household member, this beneficiary ID. We have checking account, savings account here. We've got the cash value, and we've got income from assets. As we talked about yesterday, Part 5 has the comparison of the cash values, imputed assets, with actual income from assets. So the calculator does the calculation for both and then includes which is the greater of the two. So we had 10 cents for that savings account. Doing that imputed assets, we have this amount because it's 0.06% times that 6,000. That's how we got to the $3.60. That's added to income. So this household is income eligible. They're below the 80% limit. Okay. And then we would just save this and return to the dashboard since we're not doing adjusted income. So I'm just going to export this just so you know what the exporting looks like. And this is for home, and I think CDBG allows this too. You can actually put in the name of the household. Like this is their last name, and then you could put Greg, you can put Mary. And some people like being able to do this here because then when they have them sign it, which a couple people just brought up a little bit ago, you can actually sign, and you can do the same thing on income. Sign it on this page, then it's going to match. Everything's going to match up. So you're going to know that you had 2 members that earn income, Greg and Mary. You would print their names, Greg, Amazonia, and then Mary. And then they would sign off. And this conveniently opens up into a new page. And you would just print that off. You would save it to PDF, and then you could have that in your files. It's very important that you save it in PDF because the system is not a repository for a lot of old income documentation. It just isn't. So I'm going to go ahead and I'm just going to act like I'm starting a new calculation, but I just want to let you know what the difference is with the short form, as we talked about. And then I'm going to also ask, while I'm doing this, if there are any questions that have come into the queue.
It is a suggestion that perhaps until an individual is comfortable in using the HUD calculator, that they should just continue to do manual calculations. And I see this as a positive. I think that, you know, understanding how to do it manually while also in conjunction of using the HUD calculator is beneficial, because in case the calculator wouldn't be available that day and you have an appointment to do a verification, you would still manually be able to do so, but then you can also check everything. So, you know, having that check and balance in place and knowing how to manually do it as well as how to function the HUD calculator would be beneficial. So that was just more of a suggestion from someone. Other than that, we do not have any other further questions.
Okay, good. I just want to make sure we weren't keeping people waiting, Kimberly. So I appreciate the comment, and actually, I think it just depends on how you want to work, and also how you can work. You know, just it may be, you're exactly right that you don't even have internet access, because this is always available. But if you don't have internet access where you are, if you're doing some type of distance where you're meeting somebody outside or something like that, yeah, you do need to know how to do it. You can also make up your own scenarios and practice in the calculator. That happens all the time. So I just hit short form, and I just wanted you to see that you would just type in the asset information for whomever you're working with here. And let's assume, again, like low assets. And then what's nice is that it keeps bringing you back to the same form. Sorry, I didn't mean for that to hop around. It just keeps bringing you back to the same form, which is kind of nice. So let's say she is a banker. This is the woman who works at the bank. And let's just assume her income is like $40,000. So what is nice, or I should say one more thing, is that you can see all of that on one page. But do you see how we had to do the annualized amount as opposed to the guided method? It helps you with what is their rate of pay, how many weeks do they work how many hours they work per week, and then how many weeks do they work per year. And then we can keep adding other income if we needed to. So you do have to kind of annualize it for yourself. Now, one thing I wanted to also let folks know about is that because we built the calculator for not just the Part 5 definition, but we built the calculator for IRS, we built it for, at the time, the census definition, which is no longer, just know that we have some sort of like general terms. All of these are described in the user manual, and the user manual is always available in the upper right-hand corner whenever you're in the calculator. And this is also a good place to look to have like deeper knowledge about like what's the passbook rate, and where are there other like guidance pieces available for like CDBG, et cetera. So I tried to, we try to do our best in the TA manual, but there probably are some good things here. It's mostly about the calculator, but there's a whole section on income limits, about how the rounding is done in the calculator. There's a whole attachment about raises and COLAs that would be very beneficial to even those that are doing this by paper. This is really the latest and greatest besides your TA manual, and we link to it in the TA manual, but the latest and greatest in terms of like federal guidance. related to calculating income. So just want to make sure that you guys knew that this also existed, and there's a lot of really good information, you know, in there. So that was the Part 5 definition and the calculator. So hopefully those that wanted to see a demonstration of that, they're satisfied. We only have about 9 minutes left. I'd like to see if there's any other questions in the queue, or give people an opportunity to type up their questions, and then we can take them before we end for today.
Do you have any suggestions for implementing developing security procedures for client information and for responding to data or cybersecurity breaches?
I can't speak to breaches. I can speak to what I know a lot of grantees are doing around the country. So given where we are with COVID, I know that folks are using secure federal FTP sites, so file transfer protocol sites, or they might have built-in security if they use Microsoft Teams or SharePoint that protects the documentation that's coming in or the documentation going out from those that are potentially trying to mine that data, all that personal identifiable information, or PII. So I feel like FTP, Microsoft Teams, and also SharePoint sites have been built with that kind of security built into them to make sure they're sharing files successfully. I would ask you to work with your IT department and or check what you guys have in terms of availability. I would not share files over email with clients. I think those are the couple of things I can share. I don't know if DCED would like to add to what I just said.
I would concur, and I think that was an internal question, so we can certainly talk a little more in depth sidebar.
Oh, great. Okay. Sounds good. And it's a great question. Great question.
Shauna, this is Donna, and I know it's a little bit off of this particular question, but I would always encourage grantees who can't get away from their paper to also make sure that they're securing their source documentation from these clients in locked file cabinets that is not accessible to everyone, because it's not just that we have to worry about the technology end of it, but we get a lot of source documentation that has to be protected.
Thanks for that, and yeah, and I appreciate it. I agree, and we'll talk a little bit in the last presentation about that, but yeah, I totally forgot about paper, and yes, locked in a secure location. Do not have people's information, you know, laying about. And I would also say, and I don't have this in our PowerPoints, but we can still talk about it more on the last session, but PII is literally everything. I feel like it's name, address, phone number, email. There's so much PII that's shared, and we often think it's, oh, we're just talking about social security number. I mean, really, it's everything about our person that is unique to us that that we need to also protect. So we'll keep talking about that and in the last session, but thanks for that. Other questions? I don't see anything there in the chat.
No, I don't see either, please.
Okay, great. All right, well then maybe we could end a couple minutes early and let people get 5 minutes back in their day. And we're really looking forward next week to talking to you about adjusted income and tenant-based rental assistance if you're operating a tenant-based rental assistance program. And then finally, we'll do the final session on the first, where we'll talk about procedures and timing of income eligibility, all sorts of things. So make sure you bring more questions next week.
Thank you, Shauna.